Somebody who's seen many cycles in the market and elections is now joining us, Aashish Somaiyaa from WhiteOak AMC. Aashish, afternoon. Let's talk a bit of politics. It is a near-term factor. It is impacting sentiment on the street. Let's talk about the range of outcomes which the market is working on and getting scared on. One narrative is that the current leadership may not come in the same numbers such as past, and hence the concern if the reform momentum will continue at the same speed. Is this a legitimate fear? And if this happens, market could be disappointed, and some of that fear is now already getting priced in. Is that the reason?
I think that, Ajay, very, very difficult for any of us to actually forecast the outcomes, right? Where will the numbers land up? Very, very difficult to forecast. Before we went into the cycle, and we all consume same set of news and information, but whatever I came across before we went into this whole cycle, the general expectation was that there should be continuity. Like a 75 to 80% probability given to a continuity with a high, with a clear majority. And, a 20-25% probability given to a weak majority with some coalition partners, and maybe 5% probability of, discontinuity or lack of continuity. I think that is the anticipation with which, by and large, everybody went into the cycle. Even now, we don't really know whether there is any reason for all of this to actually change, other than that there are some, informal news flow or some analysis from voter turnout. These kinds of things is what everybody is talking about. But there is no sure shot way to figure which way this is really headed. Now, given that before we went into the cycle, it seemed like a done deal, and now people are getting different types of, although none of them is accurate data, people are getting different kinds of signals, reading into political discourse, reading into voter turnout, these kinds of things, and based on that, people try to make guesstimate. So yes, now I think that what was 75-80% probability, maybe in their minds, investors are recalibrating that probability slightly lower and increasing the probability for the second option, which is that, okay, it may not be that big a majority, but, something like 2014 or something like that, correct? Like a majority, but with, so many partners, etc., etc. So I think market is just trying to factor in a change of probabilities across the three things, which I told you. Personally, if you ask me, I don't see too much of, reason for panic, because I have a different view on the market itself. I used to always think that market has not gone up as much as is made out to be. If you pardon me for a moment, I just want to share that, generally why people think market has gone up a lot is because everybody was quoting that small cap index is 60% up in last 1 year. Nifty is up 25-30% in last 1 year. Now I'm talking something very simple, but then you need to go and see where we were 1 year back. And 1 year back, we were in the throes of Silicon Valley Bank and Signature Bank, etc. If you look through that, today, you take 2 years return, 3 years return, 5 years, 10 years, 15 years. You take any time horizon on Nifty 50 total return index, the returns are between 14 to 15% compounded. Now, I have never seen a bubble where Nifty CAGR across time horizons is 14-15% compounded. If you look at small cap, last 1 year return, yes. So 1 year it is up 55-60%. But 1 year back, the small cap index was the same level as it was in January 2018. And 5 year return on small cap index, maybe 20-23% compounded. But the 10 year and 15 year average return of small cap index itself is 20% compounded. So I think that yes, there is some nervousness creeping in because of speculation on the ultimate election result. But on the back of it, I also want to say that it's not like it was outlandishly valued in the first place.
Fair point. No, what I was saying was not trying to preempt, but put probability only to what kind of outcomes may happen, and then what market would behave in that sense. Okay, let's look slightly longer term. Aashish, I want to understand what are your thoughts on the economic momentum and the earnings momentum which you are observing, irrespective of whoever sits there, whatever combination, the point is that bulk of the momentum is already there. They just have to give direction and corporate India has to do the rest. What are your observations on earnings and economic momentum?
Sure. So, on your previous point, I'll come to the earnings and economic momentum also. On just, to do justice to your previous question, just a couple of things I want to highlight. If you look through the history, in 2004, we had the current dispensation in power in 2004. Quite unexpectedly, they did not come in power. In fact, those ghosts also might be troubling some people on the margin. But in 2004, we had the very same dispensation. Unfortunately, they didn't make it. There was a new government. And at that time, Ajay, market went down circuit. Okay. So 2004, there was a change of dispensation and market went down circuit. Now, I'm sure you will recall that in 2009, the same dispensation came back in power and the market was up circuit. Okay. In 2014, it was expected that there'll be change in dispensation and the market was booming. Then it didn't do too much for 5 years. Then again, there was a victory and then, the market recovered and now we are. So why I give you these examples is because actually the market, unfortunately, rightly or wrongly, the way the market has behaved, market is supreme. The way the market has behaved is that if the economic momentum is good, then market wants continuity of the dispensation. And if the economic momentum is not good, then the market cries for some kind of change. So I think currently the economic momentum is strong. People are happy with the performance of this dispensation. And hence, I think the market is probably hoping that in some or the other form, we should get a continuity. I think that is what is causing nervousness. And it happens. In fact, 2019, before the election cycle, in 2019 also, there was significant amount of nervousness. And in fact, there was nervousness more than what we are witnessing right now. So whenever there is a big event, market will be nervous. I don't think we should read too much into it. I just feel that because the economic momentum is solid, the market is hoping for a continuity and no breakage to that momentum. Partly I've answered your second question also, but I do believe that, it's just that the external macros, the external environment is kind of mixed and not so supportive. Otherwise, one can see that domestically things are looking pretty strong. So one expects that will continue at least in the next 2 to 3 years.
Right. Ashish, yesterday we saw that SIP numbers have also come in at 20,000 plus crore now. At the same time, there is one section of the market which is analyzing the SIP closure number is also increasing. How would you read that part?
Ajay, it is happening consistently that for any number of SIPs that get registered, somewhere in the vicinity. So, of course, when you read 20,371, as we can see on the screen, that increment of, say, 19,271 becoming 20,371, say 1,000 crore incremental, is basically net accretion to the SIP book. But, it is also a fact that in any given month, if, say, 100 new SIPs get registered, it's true that about 40% or so, kind of drop off. Why would they drop off? 2-3 reasons. There is a regulatory rule that if somebody fails to honor their SIP 3 times consecutively, then we are supposed to take it as cancelled. And, we don't keep pinging their bank to collect the money. 3 times if it fails, it just drops off, correct? The other is obviously, there are times when people will have priorities and they will write to us and say, I don't want to continue my SIP. So that could be a SIP cancellation, right? So first one is SIP seizure, second is SIP cancellation, and the third is a completion of tenure. 5 years back, I registered an SIP with you for 5 years. Now those 60 months are over. So obviously in the 61st month, there is no SIP coming across. So honestly, it's quite normal. I mean, 40-50% has been the range where there could be drop-off, completion, cancellation. That is how it has actually played out.
Fair point. And of course, the KYC issues also is something which may be one of the reasons.
KYC we were all very, very worried about, but Ajay, 97 to 98% of transactions went through actually. I mean, it did need handholding, but 97, 98, everybody played their part and 97 to 98% of the transactions went through actually.
All right, Ashish, we'll let you go on that one. Thanks so much for your time this afternoon.
If you like this video, then like, share and subscribe to ET Now.